Hi everybody, it's Rowan Smith from the Mortgage Center. I'm going to tackle the biggest question I get every day. Should I take fixed or should I take variable, and what's going to happen? I don't have a crystal ball, but I do have several years in the industry, adds up to about 10, and while I haven't seen the 80s since I was a kid, I do remember what was going on at those times, and I still have dealt with many clients who told me the stories. Here's my opinion, for what it's worth, of what I think you should be looking at. First off, which strategy is best? It depends on your situation. Anybody that says otherwise is not worth the license on the wall. Your unique financial position dictates whether a variable rate is an option for you, and it dictates whether or not you should be taking a fixed rate. Picture two people in exactly the same mortgage amounts with the same income. The thing is, one guy is a commissioned person, the second guy is a person that earns a base salary. Obviously, the person that earns a base salary, that earns that amount of money, can know it's going to be there. The guy with the commissions doesn't know that. Now, if they had to stretch, or even worse, if they needed the variable rate mortgage in order to qualify for that in the first place, if they need to take variable so they know they can afford it, well, variable rates change, rates rise. People in that situation should absolutely not be in variable. They should be in a fixed rate that they know their payment's going to be because they know their salary is going to be a set amount. Now, on the flip side, if somebody is buying well within their means and they have the affordability of the payment, maybe the payment's taking up a very small percentage of their annual income, they can afford to take that risk that rates are going to rise. They can afford to take a variable rate mortgage. I myself have taken fixed mortgages on 2 out of 3 that I've had. The reason being is my income fluctuates. I want to know at least one thing is stable, and that's the payments. So I took the fixed rate. People that have a risk aversion to possibly paying more, that are going to lose sleep over their rate possibly increasing, these are not good candidates for a variable rate mortgage. Sometimes it's just best to take fixed if that will give you peace of mind, put your mind at ease, and also provide you with 2, 3, 5, 10 years of price stability. You look at a payment right now that's $2,200. I'm just grabbing this number out of the air. Look 5 years from now, look 10 years from now. What is $2,200 going to mean for a house that you're in right now? Is that going to mean a lot of money? Chances are, with inflation, job increases, wage increases, promotions, moving up within your career, that payment will present a much lower percentage of your overall income in 5 years. So if you're struggling to make ends meet, when you're looking at that mortgage payment that I'm presenting you with and you're saying, Rowan, I don't think I can take the 5-year, I need to take a variable, then I don't think you should be buying the house. Variable is not a way to try to lower your monthly payment so you can afford it. It's a way to take a risk to take a lower payment, but face the upward chance that rates could rise and thus your payment could rise. And it doesn't take a lot of rate increases to make that payment quite high. If today's prime rate is 2.25 and you're in a variable rate at prime, and you're looking at it going, yeah, but I took a 3-year at 3.49, well, how much is that? It's 1.25 that rates have to move from the lowest historic point rates have ever been. So what should you be taking today when all you've got above you is rate room to move and virtually no downward move? It again depends on your unique situation. Call me up, we'll go over your numbers, we'll go over your job, your career, what you're doing in the next few years. Are you going to have kids? Is someone going on mat leave? Are you going to be leaving the country? Do you want to travel? These are all things which play into this. If it's going to be a rental property, then perhaps you want to simply minimize carrying costs. If it's going to be a home, then maybe you should be looking at keeping your costs stable so that your housing is a fixed cost in your budget. I don't know what your situation is, but I can certainly help guide you and help coach you on what is best for you. Anybody that doesn't look at your personal situation and just screams, variable is best, it's always best, you save the most money, is absolutely providing dangerous financial advice, and you should be asking around.